All the content contained in this webcast is for informational purposes only. The investments and strategies contained in this webcast may not be suitable for you. Please consult your own independent financial advisor before making any investment or trading decisions. Good morning, traders and investors around the world, and welcome to premarketinfo.com, where we prepare you for the most important hour of the day, the first hour. Well, Dennis, good morning to you. It looks like we got a little action in Walmart. It just seems like the market's been quiet. You don't hear much news on things. Earnings season's going nowhere, and there's nothing like a good bribery scandal to wake the market up a little bit.
This is waking the market up here. New York Times reporting over the weekend about a potential bribery scandal in Walmart in their Mexico stores, that they were bribing for construction permits to get some of their new stores, and then the further that they were trying to actually cover it up with more bribes. So that's the overall concern. How much truth is to that, is obviously going to be seen hopefully over the course of the next little while. But scary day for Walmart shareholders here, because it's given back pretty much the entire, or at least half of this year's gains. We opened the year down around $59, where we traded up to $62.45 on Friday, which was very close to the high of the year. And we're trading down $60 right now, Joel. So it's not a good day for Walmart. What do you think technically?
Well, Dennis, I mean, bribes in Mexico, is that supposed to be something
No,
new?
not the way they are. Well, I guess we shouldn't say that, but a lot of things operate very different in Mexico than they do in the U.S. Let's just say it that way.
Okay, but before we go into the technicals here, Dennis, I mean, I know CNBC is going to cover this like forever, and their brother, but I mean, they paid them $24 million. I just don't see how, they might get slapped with some restrictions or fines or whatever, and someone may go to jail. I just don't see how overall this is going to affect the stock price over months and months. But just looking at it technically, the news came out. We're tanking. The pre-market chart is showing absolutely no signs of leveling up. We've been straight down in the pre-market. We are now skimming along the lows here at 59.92. That's been the low in the pre-market. You could look at the daily charts, Dennis. You have all this congestion around, the $60 level. You had several lows at 59.55, 59.66. So I think you're going to find initial support at that area, perhaps get a bounce. I mean, also, Dennis, this is one of those stocks that trades millions of shares a day. 2.5 point move overnight. If you're short this thing for any period of time, this is kind of like a gift to be able to bring some stock in.
I mean, it's a huge move for a stock like Walmart. Lower beta stock, conservative stock, 2.5 points down on this is enormous. The only concern is, going forward, is that I think, it's more just how they run the company. I think it wasn't so much in maybe the initial bribes, but they're trying to cover it up. Then obviously, always the U.S. likes a big corporate scandal. So there's going to be more information that materializes over this, and it's just a matter of whether that continues to impact the price or not. So it's probably too early to say if there's going to be a fundamental impact here or not. But technically, it is coming into some support here. Obviously, the 58.50 area is huge down there if it really went into sell-off mode. I mean, when I came in this morning, it was trading around 61. It's around 60 now. So it has drifted down $1 in the last hour of the pre-market. So it could continue to drift down, but this whole 60 area probably, is going to give you some psychological support off the hop.
Yeah, and also, Dennis, let's note that the market, the volume that's traded here in the aftermarket at a mere 200,000 shares. I just don't think that if you're a big institutional holder or have a large position as a personal investor, I just don't think you're going to go puking your Walmart here on this open. I think if anything, you'll let it digest. I could definitely see it trading up from this level over the next couple days. A little recovery. Now it's in the news. But another stock not doing so well, Dennis, on earnings, ConocoPhillips.
ConocoPhillips trading down here too, Joel, this morning. COP reported right around 8 a.m. Eastern. Actually traded up before the report. Had a couple ticks going up at $74. So somebody was excited and they jumped the gun a little bit early, because then ConocoPhillips came out, actually missed on their number. 71.35 is where it's trading right now. So it's down $1.50. That's a big down move for ConocoPhillips too. We've been drifting down here ever since we were setting the 4, 5, 6 highs in the 78 $8 area in at the beginning of March there. Been drifting down. Now we're coming dangerously close to this whole 70 area where we initially broke out from in early February. So I don't know if it's going to get back the whole move here and finish it off today. What do you think, Joel?
I think it has been pretty straight down. Obviously, someone trying to paint the tape early with those higher prints. Nothing happened with that. We are coming into support, Dennis. The low on February 9th, 71.24. The low on February 10th, 71.45. That's where we are trading in the pre-market. Perhaps if you do cut through that area, you get a little bit of a follow through. But if it came back up over the 71.50 level, let's say on the open, there's some room on the upside for this to trade. Longer term, Dennis, if the trend's going to continue, you're right, the 70.20, which was the low on February 6th, could come into play.
Sticking with our earnings news here, Joel, Kellogg's reported earnings this morning, symbol K. They actually lowered guidance as well, and you know, we were talking about a big down move for a defensive stock like Walmart. Well, Kellogg's is having a huge down move for a defensive stock. It's trading $50.80 right now. That's an enormous move for a stock like Kellogg. It typically moves 30 or 40 cents a day. So when you get Kellogg's down over $3, that's significant. I think, you know, this whole 50 area probably might provide some support, but man, this is a big move down for Kellogg's, Joel. The value investor is going to come in here, or what do you think?
Snap, crackle, and pop, huh? On this one.
Popping down.
Yeah, a whopping 7,500 shares has traded this in the pre-market. So quite a bit of a downward move for only that amount of shares. Obviously, someone's hitting the panic button. But this chart's kind of interesting, Dennis, because here you are, you're filling a gap with a gap. And when you have these kind of moves, when a gap from the 50.39 to the 51.93 low, I mean, and correct me if I'm wrong, that was all predicated that they were buying of something from Diamond Foods, correct?
Right.
And there was going to be all this great integration and all, you know, yada, yada, yada. And boom, the juiced up, you get this gap in the market. It holds in there, comes down and tests the gap area and goes back up. But just when a lot of these moves happen in the pre-market and you know, in the morning right before the market opens, they just don't. To me, they just don't have any validity. And now, lo and behold, here we are. Now we're coming back down to 50 with some earnings news. So I would look for some major consolidation around this 50 area. We did spike down to 50.12, Dennis. And now we're on a little bit of an ascent here, so I keep a real close eye on that 50 level. And if we got above 51, I just wouldn't want to be short this thing.
Moving on, Joel, Xerox had earnings today too. XRX, it's a stock we hardly ever cover, but some of our traders like to trade these lower price stocks, so we should do a quick technical for them. 805 it's trading right now after closing at 787. $8 looks enormous to me on this though. You had 1, 2, really even the last couple of days, the highs 799 and 799. So this whole $8 area I would use for a swing number. We open below there, I'd probably use it as resistance. If we open above there, maybe you can use it as some initial support. What do you think of Xerox?
Decent commercials, Dennis.
Decent commercials. Do you like the commercials? Do you like the stock?
$8 is huge, Dennis. I'd keep an eye on that. If in fact you could get a pop over 8, there is some room in this thing, perhaps like to the 820 level. But you know, here's another stock that, you know, back in the day, you know, was a high flyer. I mean, they have their core businesses. I kind of put Xerox like in the GE category. I mean, this stock is just, it's seen its heyday. I mean, it was not something that I would want to own long term. Pop over $8, yeah, you can get a run on it, but I just don't have a lot of faith in this stock long term.
Financials are moving here this morning, and it's probably because the European financials are weak once again. They've been kind of just bouncing, then falling, bouncing, falling here in the last few weeks. Well, today they're really falling. ING, for instance, is trading down now, Joel, at $6.73. That actually is making it very close to a new yearly low. 687 is definitely the low of the move, and we're trading below that right now. So ING, very, very weak. Barclays is trading down. Deutsche Bank is trading down. All these European banks are down 3 to 5% here, Joel. Not a good day over in Europe whatsoever. And then quietly, these U.S. banks here are starting to move down here too, Joel. So it's scary. Like we haven't really talked about the U.S. financials. We've talked on this show, but the media really isn't covering this down moves. I mean, look at Bank America now, Joel. Bank America is actually trading at $8.05 right now. It has given back the entire move it had there, that parabolic move it had from 8 to 10, which we talked about quite some time in the 10 topping out, and now it's trading down here at 8. These U.S. financials, what do you think? Like Bank America, Goldman, all these U.S. financials are not looking good, Joel.
Dennis, it doesn't. Why are you even worried about it?
Why am I worried?
We are decoupled from
We're
Europe.
decoupled from. I love them when they say
super bank economy. Just listen to Bob Pisani, Dennis. It doesn't make any difference. This is just such a huge buying opportunity because it's like Europe's not even there.
Yeah, and if you believe that, I'm not a big fan of the whole decoupled from Europe thing. You can say we're decoupled all you want in the media, but man, if the European banks start to get in trouble, you can pretty much bet that our U.S. financials will be in some trouble again. And I'm just wondering, since these things are now really starting to look weak here, if it is the European situation starting to come up here again, Joel.
It's just hard to trade these European banks because they have the moves, overnight, and the primary markets are there and they're pretty much dictated. I mean, what you could look at ING, it's basically been in a range since November. The low end of that range has been the 624 level. High end of the range has obviously been under $10. I don't think I'd start even looking at this stock on the long side until you got to around that 6.25 level. You also have a low back in our September under $6. Going to the U.S. financials, they had good earnings, right, Dennis? Or was I listening wrong last week? Goldman didn't have the greatest earnings, but didn't Bank America have great earnings? I mean, I just don't understand these moves.
Joel, you had that move up in the pre-market. Remember we were talking about it. Traded at $9.44. It opened at $9.15 and then ended up going straight down here, Joel. And it's been straight down really ever since its reported earnings. So it looked like it was good numbers, but they haven't linked it at all. This $8 is absolutely enormous on Bank America. I'm going to tell you right now, needs to hold $8. I can actually see 1.4 million shares at $8 in the book even to buy. So $8 is enormous. We're at 8.05 right now. Takes that $8 level out. I think it could chop through it a little bit, but this whole area, we had a month and a half of support there at $8, Joel. You got to think it's gonna eventually, hopefully, hold that area. I mean, if it doesn't hold and start to cut through that 750 area, it could get real ugly. But that $7.50, $8, that whole area is like pretty decent support.
Yeah, 805 has been the low in the pre-market. Obviously, someone's bringing in some stock there. I mean, if you don't want to short this thing on the open down 30 cents. If you want to be patient, I'm sure we can, over the next few days, drift back up maybe to this 850 level. Well, 833 was yesterday's low. So, I mean, it will definitely drift back up to that area in the next 2 days if you're looking to put on some long-term shorts. And Goldman Sachs has kindly just broke down from that 115 level. It really tried to hold there. We're now going to be coming into support at 109.16. That was a low back in January. Just a buck away from that right now. Looking at the pre-market, Dennis, pretty much been straight down. 110.28's been the low, but on very little volume. We covered a lot of this earnings stuff, Dennis. What would a show be without talking about Apple Computer?
Yeah, you always got to talk about Apple. Obviously, has earnings coming up tomorrow, so it's in pre-earnings trade right now. People are jockeying for a position, whether they want to take it into the report or don't want to take it into the report. You're going to see some extra volatility. Sometimes you see that pre-earnings run up. The only thing that's been so weak here the last few sessions, you get scared that maybe the people that are nervous to take it will overcome. Or will overpower the people that wanna buy it up before the number. I don't know, Joel. What do you think of this stock?
I think 555.75 is going to be a big number. That was a low that we had back when we started gapping up, and here we're going back to these gap and go moves that you had from this 550 level. Just caught people short, forced them run up to the high. I don't know, Dennis. For some reason, I just think this thing's going to trade 550 this week. It'll probably trade 550 and 600. I don't know how if I'll be able to get it right, but it just seems like that 550 level. You had, you topped out there in March, and then you broke above there, ran up to the all-time high. For some reason, I think that level is going to get tested this week. Just a few other stocks in the Big Ten, Dennis. What happened to IBM? They beat, they raised, and they increased their dividend, and they've been down $10 since that.
Yeah, it's just the fact that I think a lot of these stocks, like you were saying even in your blog there last week, Joel, a lot of these stocks were priced for perfection. And, they come out even like we were saying with the Google, comes out, announces a stock split, now it beats earnings, seems to do everything right, and they punish the stock. I think it's just the market on a lot of these issues was just priced. It was just an issue of price more than anything. I mean, IBM's had a run this year from 180 to 210, pretty much straight up. It had a pre-earnings run up here, and even I remember those buy imbalances that were pushing it up the couple days before the earnings. Came out with the earnings, and they just weren't quite good enough. They wanted better than perfect earnings, so they are beating the stock up. So when stocks are priced for perfection, they need to really, really beat on the bottom, top line, beat everywhere. And if you're just beating by a bit, it's just not enough. And I think IBM is actually getting punished a bit for it, and slowly starting to drift down. I mean, this 200 area is starting to look like some significant resistance with yesterday's high, or Friday's high, at $200.12, and now trading significantly down this morning at 197.12. I mean, we opened below this 197.52 low. That's making new lows on the move again. Then you start to think about that 195 area where we broke out from in mid-February.
Yeah, moving over on some of the other on the Big Ten, I was hoping that ExxonMobil wouldn't cut through the triple bottom in the pre-market, though. That's what we've done. You had 3 days of identical ranges. It's always good to play a breakout on those. The breakout has already occurred, so perhaps we'll get a drift back up to that triple bottom there, the 85 level, to get some shorts off. Also, another technical level. Almost got there on Friday there, Dennis. Kind of ran out of gas. Microsoft up at that 33 level, got up to 32.89. Seems like it's already willing to fill the gap. 32.05 was a low on Friday, and now it's leaning on the lower end of that. I mean, did everyone already forget what stellar earnings Microsoft had?
I don't know, Joel, but it was a pretty low risk short. We actually talked about it on our on a mid-morning show that this thing was running up there to that whole 32.95 brick wall that we had been talking about. It got to 32.89 right in front of it. So those high frequency traders, man, they love to lean on that area, especially get the triple top. You get size 33. It was a perfect scenario for the high frequency guys to start leaning. So that's what put a lid on it. You get all that high frequency resistance and the high 32.80s. So 32.89 tops it out, and the stock kept pulling back since then. So they're probably bringing in those shorts now. I'm sure the high frequency guys have covered, and now it's just a matter if you had some swing traders in there, they're probably possibly covering too. So look at the 32.05 low from Friday. If it starts to take that out, I wouldn't want to be long it. We said on Friday it needed to hold that 32, which it did. Needs to still hold it. So if it can hold above there, maybe the rally can stay intact here for this, Joel. But below 32, I wouldn't want to be long.
Okay, just to close out the show, just real quickly on J&J for when we talk about technical analysis, old support, new resistance. J&J finally broke through that 64 level, even traded down to 62.76 last week. But look at that, Dennis. You get a little bit of a rebound rally. And where does it stop? It stops 3 cents short of 64, and now we're back down. So let's keep a real close eye on the 64 level. J&J is major resistance. And we really haven't talked about the S&Ps much, Dennis. Down 14 points. I was looking at this 1360 level as real good support. We've cut through that in the pre-market to 1359.50. Probably get a little bit of bounce off that level. But Dennis, what we need to keep an eye on this week is 1352.50. That was the low that we had when the market broke down initially back on April 10th. So there's going to be your major support the week. We take out 1350, Dennis. We're probably going to 1332.75 and maybe back down to that 1300 level.
Scary thoughts there, Joel. I think this market is still weak though, and I think rallies probably to be sold in the overall market.
Okay, that's our show for today, and we'll be back with our 10:30 a.m. update.